Hello and welcome to Trading Hour, live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always, Hormiz Patakia and Reema Tendulkar. Well, for the markets, yesterday again we saw a day in the green. We were off the highs of the day. We touched that intraday record as well. But for now, it's been quite volatile. Yes, right now we are seeing that massive recovery from the lows. The Nifty is absolutely flat, but there's some negative bias to that. We do have the mid caps, which are in the green currently, but right now as well, advanced decline ratio is in the favor of declines. This is something that we saw yesterday as well. Bank Nifty in the green right now, but quite flat, so to say. And we are talking about a lot of results as well. The earnings reactions which have come by, and of course, the big talking point has to be the outcome that we are awaiting from the Bihar election results as well. That is something also that will move markets in a certain manner. For now, a recovery which is underway. We'll have to see whether that continues or not, because that has been sold into at the initial trading hour as well. But a lot of stocks on our radar today and some primary market action as well, guys.
Indeed, but it looks like it's going to be a landslide. Okay, landslide win for NDA in Bihar, and maybe the markets are now finally pricing that in. From the lows of the day, it's been a recovery of about 100 odd points. 25,750 was approximately the intraday low on the Nifty, and now it's up close to about 100 points off that. And Adani Group stocks, by the way, are the ones fueling the up move in the last 30 minutes or so. So pull up in Adani, Ports, Enterprises and the rest.
Good going for the benchmark. It's been a good week, if you can call it that, other than the reaction that we saw from the highs of the day yesterday and this topsy-turvy moves that we are seeing so far in today's session. But otherwise, it's been a fairly decent week. But the race for Bihar counting is currently underway. The NDA comfortably in the lead as of now. Parikshit is joining in with more on this. Parikshit.
Well, yes, we have to see whether the NDA can match its performance of 2010 assembly elections when it crossed the 200 mark on its own. 122 is the halfway mark in this election, and the NDA seems in a very comfortable position. But there is another story playing out, and that is the JDU and BJP improving their vote share over 2020. Just a small statistic that I want to bring up for our viewers. In the last election, the NDA won 125 seats with a 37% vote share. And the BJP vote share was 20%, JDU's was 15%. Currently, as per the Election Commission, the vote share of the two parties, that is BJP and JDU combined, is already at 41%. So BJP at 23, JDU at 18. So the NDA has gained because of these two parties. And both these parties have done well all across the state. They've done the heavy lifting in this election. And when we look at the India Alliance, we see that the opposition has been dragged down by the Congress and the other parties as well. Now, let's look at the overall factors playing in this election. Let's look at the current leads. Out of 243 seats in the 2025 Vidhan Sabha election in Bihar, the NDA is leading in 183. So if they win at this number, this will be one of their best ever performances in electoral history. They're already doing better in 62 seats compared to last time. The India Alliance only at 55. And let's look at the numbers of the India Alliance. And that's what I was really saying. The RJD has 38. Yes, they've done poorly in about 37 seats. But the Congress has also performed badly. The CPIM, the VIP, CPM, IIP, CPI, all the smaller parties not doing very well. And we've already seen the Congress saying that this election is a fraud. There has been vote chori. This is an election now against the people of Bihar and the Election Commission of India Chief Gyanesh Kumar. They're talking about how the special intensive roll was conducted and almost 80 lakh people were out of the electoral race. But remember, when the SIR was being conducted, there were no appeals at that time. Let's look at the overall numbers once again. There are certain filters here in our magic wall which I want to bring up for our viewers. Let's look at the SIR impact, because this is what the opposition is going to be talking about in the next few days. Now, there were about 106 seats where the SIR or special intensive role could have possibly had some impact. Here, the NDA is leading in about 83, the India Alliance at 20. And the reason why the opposition, according to the BJP, cannot complain is because they had been given a chance to appeal at every stage and no one exercised the right to appeal. No no citizen came forward with appeals at this stage. Let's look at some other factors now. I want to bring up the woman factor, the Narendra Modi factor in this election as well. Let's begin with the Narendra Modi factor. The reason why I'm mentioning this is because in 2014, 2019, 2024 and the 2020 and 2025 assembly elections, Bihar has stood firmly behind Narendra Modi. And these were the seats, 94 seats in Bihar where Prime Minister Modi had carried out his rallies, and the NDA is winning in 68 of them. All across the state, be it women, be it the rural voter. And just lastly, I just want to end with the rural vote. 82% of Bihar is rural vote. 223 seats can be called as rural seats. The NDA performing exceedingly well here with 168. So it seems that JDU, Nitish Kumar is in the driver's seat. Tiger Zinda hai, as says the poster outside the JDU office. And it's been a strong performance by alliance partners in the NDA all across the state and with different vote banks in Bihar.
Okay, Pariksha, thank you very much for that. We'll keep coming back to you for more. For now, let's turn our attention to some primary market action now. The IPO of Capillary Technologies India has opened today. Now, this is a SaaS company that basically helps company run end-to-end loyalty programs. Right from helping customers earn reward points to redeeming the reward points. So, for example, just you and me enter into any retailer's app. Now, Capillary, this company's software, will track your existing loyalty points, your rewards, and even your complete profile. So if that app or the brand wants to send you an offer, any discount or coupon, then the Capillary's AI, artificial intelligence, will analyze the customer behavior and automatically send you the most relevant offer. And again, when you go to checkout, make the payment, Capillary's APIs will instantly fetch the customer's points balance or help apply rewards and help you redeem the points. And some of the big clients include Tata Digital, ABFRL, Puma Sports, Domino's, etc. Anish Reddy, MD and CEO of Capillary Technologies, is here with us in the studio. Anish, good morning and thanks so much for joining in. Let's talk about revenue growth for the company. I think 25% in the first half of FY26. Is that number sustainable? And you turned profitable just last year. What aided that? And what is the outlook on profitability and margins going ahead?
Thanks, Reema, for having me here. You asked about revenue growth. Yeah. We're a fairly global business, right? So we see growth across markets for us. The first half of this year, we grew at about 25%. If you take our net revenue growth for all of last year, that was also at 25%. Now, the way this growth comes about for us is a lot of our large customers grow with us. We work with 19 of the Fortune 500 globally. And we have a number in the DRHP, about 15 to 20% of annual growth is from these enterprises growing. Each of them grow 15-20% with us. Right? So that's the biggest chunk of this growth, and that we have visibility for a while. If you look at our last many years of net retention rate, which is existing customer growth in a different language, it's been between 115% to 120%. Right? So a good chunk of growth comes from there. Further, we tend to win, at least or around one Fortune 500 customer every quarter. So if you look at when we filed the DRHP in June, we had 16 Fortune 500 customers. Today we have 19. That's the second axis of growth. We continue to win some of the best customers globally. That's because if you pick any analyst report on the space, on loyalty globally, we are in the top 2 in the world. Either we're first or second, depending on which report you end up picking. So that gives these enterprises a lot of confidence to work with us. A third engine of growth for us has been acquisitions. We go by competitors at, it's a fairly good ROC model. It generates about a 25% ROC. We buy these companies, migrate their customers over to our platform. So you convert what's a very services-heavy business in the competitor we buy into a software SaaS 65% gross margin business. So those three have been the ways of growth. On EBITDAs and if you look at our last 3-4 years of, we've roughly added about 3-4% EBITDA each year. So last year, we also turned net profit positive. But if you look at EBITDAs wise, we did a 76 crores last year and a PAT profit about 14-15 crores. This first 6 months, we've already done about 40 crores of EBITDAs. And more importantly, the business generates a lot of cash. We've generated about 55 crores of cash as well
So,
the first 6 months.
coming back to profits itself, are you profitable in the first 6 months of this fiscal already?
Yes.
And is profitability a path that will continue for the company going forward? Because usually before the IPO, we see a profit and that doesn't continue. So that's an investor concern. Even on the cash flows, you did have negative cash flows in FY25. Now you've said you're cash flow positive. Is this a trajectory which will continue as well for the company?
Yeah, so let me answer the profits piece and then I'll come to the cash piece. So if you look at our EBITs for the last 3 years, they've increased by about 3-4% each year. So there is a very sustained 3-4% growth that we've shown all through the last 3 years. And even if you take the first half of this year versus the first half of last year, there's again a 3%, about a 300 bips movement, right? So there's no reason why that should not continue into the near future. It is a 65% gross margin business. We talk about it in the RHP as well. We're today at 11-12% EBITDA. Right? So there is quite some distance you can move up in that sense. Coming to cash, like you said, last year was a negative 46 crores of cash. The year before was a 96 crores of cash.
That's
Basically, we work with these very large enterprises in the US. And one of these customers paid us about 80 crores in March of FY23, right? So that's why that year looks like 97 crores of positive cash.
Got it.
I think it's good to touch on the business model. We typically charge our customers annually or quarterly upfront, right? So this is a recurring subscription. They sign up for 3, 5, 7 years. Our annual churn is about 5-7%. So it's very long relationships. And typically we charge them annually or quarterly upfront. So in this specific case, in February, we won a very large, a Fortune 10 healthcare company in the US, and they paid us fully upfront in March of 24, right? So which is why FY24 looks like it's 96 crores positive, and then FY25 looks like slightly negative at 46 crores. But the right way to look at it is do both the years together, so it takes care of this. If you take the first half of this year, it's a 55 crores of positive cash on a 360 crores of revenue, right? So we are well above the 10% in terms of free cash in that sense. So,
Unfortunately, Anish, we're out of time. We'll continue this conversation another day. Wish you all the very best.
Thank you.
Well, that was just a little bit of a precursor about Capillary Technologies, the IPO which opens today. We will slip into a break. On the other side, we'll focus on crypto markets. Manisha Gupta joins in on the other side.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
On Crypto Corner, we talk about the crypto prices today. Remember, we've seen a very sharp decline onto this one. It really has been a tale of two halves, really. The first half of 2025 was all about buying, institutional adoption, tokenization, and strong rules, regulations coming in from US as well, and all-time highs being hit in many of those cryptos. But take a look at the prices right now, and we're trading below $100,000 for Bitcoin. It's trading at a 6-month lows at around 97,500 right now. We did see an all-time high for Bitcoin on 6th of October, and it hit $126,000 therein. But we have seen nearly 22% of a decline from those kind of levels for Bitcoin alone. And with the kind of action that seems to be going on, the heaviest of action for puts at 95,000 to 90,000 is where it seems to be getting in. So those are the kind of targets that people are working with at this point in time. Well, apart from that, if you look at the overall crypto markets, it has seen a decline anywhere between 15 to 25%, not just for Bitcoin, but all coins and various other used coins as well. Markets are looking at a very heavy selling pressure coming in. And if you look at the last 1 month itself, well, investors have sold roughly 8,15,000 Bitcoins, and is the reason you have seen not just the prices decline, but the overall market cap has continued to decline as well. The high that we have seen in this year in sense of crypto market cap has been at around 4.3 trillion. It seems to be at around $3.3 trillion at this point in time. And with the kind of selling pressure that we are seeing, it is the highest since we saw in January 2020. There also is a fresh wave of risk aversion coming in. Remember, there is selling that we are looking at in tech stocks, the regional stocks have come under pressure as well. There's uncertainty when it comes to also the kind of economic data that we could be coming in looking at from US after that or ever longest shutdown that we saw in the US government. There's uncertainty on what, if and whether we would see any economic data coming in, and that seems to be putting pressure on many of those risky assets therein. Apart from that, when you look at the overall value liquidation, it has been to the tune of almost $450 billion since early October. And that is because there is huge redemption that we've seen come in from institutions, high net individuals, even retailers on the side. ETF redemptions have come into the markets as well. And corporate treasuries also seem to be selling into Bitcoin and other altcoins on the street. And that is the reason you have seen such sharp declines coming in across crypto there. So much so that on a week-on-week basis, month-on-month basis, and even for the year, we've seen declines or red come in for many of these cryptocurrencies. On a week-on-week basis, as you can see, it's anywhere between 5 to 13% of a decline that we have seen in cryptos like Bitcoin, Ether, Binance, Cardano, Solana, etc. On a month-on-month basis as well, it's down between 12 to 30% is what we've seen in case of crypto markets. The last quarter of every year mostly is a positive one and is the reason you saw a lot of buying ahead of this quarter. But with the kind of declines that we're looking at, the decline also has been very, very sharp. With a lot of people now selling crypto for cash is what we've seen happen in the month of October, and November seems to be going the same way. But that's all the time that we have on Crypto Corner for you. Go for a break, come back and talk more about markets and stock specifics.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
Welcome back, and the recovery on the Nifty again getting sold into. It's been that kind of a day. It's been an absolute roller coaster, if you could call it that, if you could see that chart. But continuing our conversation now on the financial sector, we are now being joined by Vishal Goyal, the India financials analyst at UBS. Vishal, good morning. Thank you for joining in. There was a lot of conversations about private banks, their results, the larger names as well, some stress with regards to their asset quality and margins. But the highlight of this quarter has been the immense amount of money that these smaller lenders have received, be it Federal, be it RBL. Do you believe that the smaller lenders are now more primed for better returns compared to their larger players, just on this anticipation that there might be more such deals brewing in the future?
Yeah, hi. So, I think availability of capital clearly helps the small players because easy liquidity, good asset quality environment, and availability of capital. These are generally, a great recipe for mid-sized lenders across like whether banks or NBFCs. And typically the valuation gap versus the larger peers closes in such environment. So, probably what we are seeing in terms of outperformance is pretty much, what the environment is giving them as opportunity.
Vishal, hi. Morning, Rima here. You hosted about 30 financials at the UBS India Summit. What were the key takeaways in terms of loan growth sustaining beyond the festive season, this immediate GST 2.0 push, and even on asset quality? Because in the numbers, there were some chinks in the armor, whether it's about MSME, credit costs have gone up. Say, for instance, something like a Bajaj Finance, for instance. So what were the key takeaways on loan growth, on cost of borrowing, on the asset quality that you gleaned, and if you could provide specifics on that segment-wise?
Sure. Yes, I think it was a great conference for us. Like we had, as you said, 30 odd financials and experts actually attending the conference. And what we see is mood is pretty optimistic. We have seen loans like demand environment generally getting better. I think most lenders are comfortable seeing better growth. So the festive demand, of course, almost everybody is watching it very closely, that whether it will sustain, but clearly there has been some positive impact of festive demand on the lending side, especially consumption lending. And what we actually see is most lenders are more comfortable lending unsecured as well, once again. So, we have seen a couple of, years of pause on unsecured lending, and now we are seeing the risk appetite coming back. So that was, I think, heartening to see from the lender's point of view. The question on asset quality, yes, I think, again, if you see, there are fragments and segments where there is some stress brewing up. So we hosted, a credit bureau also for MSME risks. And what we are seeing there in the data is micro loans are seeing increased stress. Some of the players, I think NBFC segment lenders are probably seeing higher defaults, while the larger banks, including larger private and SOE banks, are still seeing stable asset quality on the MSME. So that's the only particular segment where we are hearing increasing risks. Otherwise, I think most banks or lenders have suggested the unsecured risk is stabilized, and therefore they are all expecting credit losses to come down from the unsecured book.
Vishal, now that we are seeing improved demand outlook, and that's the consensus view as well, how much of it is in the price already? Trying to understand the valuation perspective, also because there's so much funding that's already happened for some of these names.
Yeah, great. I guess, see, valuation question, frankly, if you compare banks' valuation versus the rest of the market, Bank Nifty is still trading below historical average multiples. So that probably, kind of gives you a sense that valuation-wise, they are quite reasonable as a sector. But yes, I think the issue has been demand. So we used to growing at 20%, which came down to 15%, and now we are like our system struggling at 10%. There is a small, improvement from 10 to 11 to 12 probably by the end of this year. So the loan demand part, I think, has to come back for the valuation to re-rate significantly from here. Otherwise, I think as a sector, I think the valuations are reasonable. And within sector, there are, opportunities in the weaker players because they are generally valuation catch-up plays. While the defensive or high-quality names, they are already, delivering numbers. And there is no major upside, earnings upside revision which are happening on the larger caps.
Vishal, have you tracked some of these recent new listings in the broader financial landscape? Grow and Pine Labs. Grow is inching towards that 1 lakh crore market cap. It's already at 90,000 crore. Pine Labs has had a pretty good day one on the Dalal Street. Stock is up 20%. Any thoughts on these two?
We don't cover any of those, so I won't be able to comment. But let me give you a broader sense on how we are thinking about the overall financial services and within that capital marketplace. And we had recently published a 5-year thematic note also as well. We clearly seeing this shift of household savings pattern from bank deposits towards, equities and slightly more sophisticated product. And that trend would generally be supportive for the financial intermediaries, brokers, asset managers, even exchanges, except that there is a near-term regulatory risk, right? As we all already know. That's the only caveat in the interim for this segment. But otherwise, if I think about next 5-7 years, that is a segment where the new flows are growing at a faster rate versus the traditional fixed income products.
Okay, all right. Thank you so much, Vishal, for joining in today with your thoughts and the outlook on the banking space overall. That's the word coming in from UBS. But we do have a lot of buzzing links, maybe on the upside or downside. Hormuz has gone across to the wall and he's going to put the spotlight on top movers in the market. Hormuz, take it away.
Well, the conversations all through the morning have been around Bihar and the election outcome. But amidst all of this, Vodafone Idea has quietly slipped above its FPO price. Just for a brief period, still trading around those levels of 11 rupees. The fourth straight day of gains for the stock is up 15% now in the last 4 sessions. And from the lows of August, where it was down to around 6 rupees, the stock has almost doubled. And we have had volume substantially high as well. It's around 70 crore shares that have been traded, which is 2x of the 20-day average. And of course, as I mentioned, it's trading above its FPO price of 11 rupees. Of course, it gone up to 19 and then it came off. So still some scope still there. But Muthoot Finance has been the earnings of the day, if you could call it that. 10% higher on the stock now, trading at record high levels. It's set for its best week since June of 2020. And we've had more than 25 lakh shares already traded on this stock. The 20-day average is just 1.5 lakh. As the fourth straight straight monthly advance. And if you take a look at the year-to-date returns as well, the stock is up 74% and it's turning out to be the best year since 2014. 5 more percent and the stock will have its best calendar year since its listing. Now, Explio Solutions is the third one. The last 9 sessions, the stock had gained only in one of those. And we've had today 1.7 lakh shares. The 20-day average is just 2,500 shares on this 15% advance. The stock has moved above its 100-day moving average of 1,096 and still been an underperformer, down 20% still in 2025. And lastly, Paras Defense. Numbers came out yesterday, building onto those gains. Now 6th straight day of gains at 15% in the last 6 sessions. Volumes already are double of yesterday. We had close to well over 30 lakh shares that have been traded. The 20-day average is just around 2 lakh shares. And the stock moved above its 100-day moving average of 723 and has a fairly good year so far as well. Gains of around 50%.
Thank you very much for that. We will get into a break. On the other side, the management of TVS Supply Chain Solutions will join in to talk about their Q2 numbers. Stay tuned.
Welcome back. You're still tuned into Trading Hour. TVS Supply Chain Solutions reported its Q2 numbers. Company saw its revenue go higher by 6%, but margins came in under pressure. Profit after tax surged nearly 54% versus last year. That was led by higher other income and lower finance costs as well. Mr. Ravi V, who's the managing director at the company, is joining us now to understand the outlook going forward. Mr. Ravi, good morning. Thank you so much for joining in. Well, it was a 6% revenue growth and other income was up 60%, which led to higher profits as well. Can you give us a sense of what was the impact of reduction in GST rates on the business? How has it been in Q3 so far? And what is the outlook for FY26 considering that big change that we have seen in GST rates?
I think it's thank you so much. It's been a good quarter, stellar quarter actually. It's been a landmark quarter for us as we delivered a PBT of 23.3 crores. I think it is a high since we listed. And it's come on the back of very strong delivery efficiency and cost optimization. When you look at the India perspective, the India business grew by almost 11%. The freight business also contributed to the India business, thanks, I guess, in a way, to a lot of shipments during pre-tariff deadline. But if you look at it from an overall perspective, the India business looks very healthy. We are actually looking at a significant opportunity given the GST rate reduction. We are seeing uptake in the volumes. And we expect 3 to 4% sequential growth on the India business. So very bullish about the opportunities in India from a company perspective.
Ravi, hi. Morning. Rima here. What about the overall top-line growth? You've been struggling with mid-single-digit kind of top-line growth. Q2 was 6%. Q1 was about 4-odd%. FY25 was also a high single-digits kind of top-line growth. Because in the past, you've spoken about your aspiration of mid-teens kind of revenue growth. For FY26, FY27, what do you expect on the revenue front? And then we'll get to the PBT guidance.
Right. I think you're absolutely right. The aspiration of the company is to be in the mid-teens. And we saw about a 6% growth year on year this quarter. Going forward, I think the opportunity, when you look at the pipeline, we have almost 6,200 crores of pipeline. And many of these opportunities, especially in the ISCS side of the business, are slightly longer in terms of the gestation period. We are confident of closing quite a few deals in this coming quarter and looking to, like I said, a 3 to 4% sequential growth over the next 2 quarters. That should take us to a double-digit growth for the full year. That's the outlook from an FY26 perspective, and continuing on that trend to get to an aspirational mid-teens number for FY27.
Mr. Ravi, your business development pipeline, if I read correctly, is well over 6,000 crore rupees. What is the execution timeline for that, and what are the kind of margins that you are envisaging for these projects? Are these high margin projects, low margin projects, and what does that do to your overall margin trajectory for the year?
I think the margin has to be looked from the fact that the ISCS business has actually seen a 16% margin expansion from Q2 of last year. The ISCS business, if you remember last quarter, we had guided to the fact that we have combined the UK entity to one, and we see a lot of operational efficiencies out there. And that is really playing out. We expect that to get completed by Q4 of this year. So we should exit Q4 at a significant expansion in the margin in the ISCS business, which today contributes almost about 70% of the overall revenue of the company. So from a company perspective, we will continue to see expansion in the EBITDA numbers and the subsequent increase in the PBT and PAT numbers for both the year and going forward. We expect FY27, we expect to complete at about 4% PBT.
So when you say you will continue to see EBITDA margin expansion, if you can quantify that for us, Ravi, how much will that be in overall business and your key segments as well? Because this time around, even the global EBITDA margins have halved. So what does it do to the consolidated EBITDA margins?
Right, the global freight business, global forwarding business is definitely an area which is on watch. We had messaged it last quarter also that it is impacted significantly by the overall global macro. We will continue to see softness in the global forwarding business, and we will see sequential uptick, but it's not going to be something which will not be a trajectory change from a global forwarding business. But on the ISCS business, we will see significant expansion. So from right now, the ISCS margins have expanded from 8.1 last year to 8.7. We should be in the region of 9 and above when we finish the year for FY26. So we see significant opportunities to expand the pipeline, and that's coming on the back of the initiative that we have kicked off. We call it Project One, which is the unification of the European business. And that's giving us significant headroom to expand the ISCS margins to over 9%. So overall, we expect ISCS to be in the region about 9% and GFS to be the 2.5% margin, which will get the company's margin over 7% at the EBITDA level.
Thank you very much, Ravi, for joining in. That's TVS Supply Chain. It's been a bit of an underperformer since its IPO 2 years back, August of 2023. I think the issue price was 193. Stock today is 122. Before that, Mangalam is now joining in to get us the latest trends from the futures and options space. Mangalam.
Well, if you look at it, there has been some supply coming in at around 26,000 on the Nifty a couple of times in the last 2 or 3 trading sessions itself. And earlier, as the market moved towards 26,100, we did get supply. And that's something that the F&O players are looking at as a bit of a line in the sand, and which is why the Nifty and the Nifty Bank are slightly under pressure in today's trading session. But there's nothing really to worry about. Why do I say that? Because one, at the index level, the mid-cap index is doing fairly well. And secondly, post-Bihar verdict, the India VIX is also fairly well contained. All you got to do is cross that 26,000 mark and stay above this sustainably. And that's something that we'll most definitely keep an eye out on. And the other reason why, bull should not worry is because the 25,750 mark, which is now the rising 20-day moving average, that is holding on fairly well as well. So long as we hold it, that's, advantage bulls. On the way up, however, at 26,000 call, the bears are still not giving up fight. There is a fair amount of writing in the 26,000 call. At the lower level, the 25,800 puts are fairly well written as well. So 25,750 to 25,800 is an important support zone. For the market to cross past that 26,050 mark would lead to a powerful short covering rally. And the most interesting thing in the F&O action today is that there is a lot of activity at the 27,000 call. Not to say that the market is going to run there, but the 27,000 call for about 1.5 rupees a pop is seeing a fair amount of bidding right now. And a lot of people have done some punt buying out there. See, 1.8 crore shares, as you can see, of which 71 lakh shares on the 27,000 call have been added just today, premium of 1.5 rupees. Who's to say if the market sustains above that 26,000 mark for a bit, perhaps crosses the record high at some point as well, maybe these, who are buying it for a punt may get rewarded, but that's exactly what it is. Not to say that the market's going there, but there is a fair amount of punt buying at the 27,000 call on the Nifty.
Oh, 27,000 call. Very interesting there. You're still struggling to get to 26,000, but there's some punt buying, as Mangalam was highlighting, at 27,000. We'll take a short break, but just before we do that, a quick programming note for our viewers. You don't want to miss this one, is the Meet the New Team at CNBC TV18, live at 3:30 p.m. today, and watch our new anchors make their debut. We'll be right back.
Welcome back. Let's get to the big story of the day, and it's individual stock. Sharp moves seen in stocks like Muthoot Finance, Jubilant FoodWorks and Bharat Dynamics, all reacting to the Q2 numbers. And our team is joining in, Gaurav, Mangalam and Upasana, with the fine print. So first, let's begin with Gaurav on Muthoot Finance.
Well, as when you look at Muthoot Finance, it is shining just like gold, because AUM that grew almost by 46% on a year-on-year basis. And in fact, what remains a key thing is that they have now increased the guidance from 15% to 30 to 35%. Remember, Muthoot Finance in FY25 also grew its AUM more than 40%, and in FY26 so far, the AUM growth has been more than 40% as well. Apart from that, if you look at the numbers, net interest income now that increased almost by 50% on a year-on-year basis, and profit that increased almost by 87% on a year-on-year basis. So that's actually a huge beat. Even if you look at the consensus estimate, there was a one-off impact. We should not call it as a one-off impact. In fact, it was the reduction in NPA that helped its net interest income to increase almost by 50%. And as a result, if you look at yields, now interest yields that also increased to almost 20%. But going ahead, management said that this will remain in the range of 18 to 18.5% on a steady state basis. Now, what remains another key thing is that it is not just gold business. If you look at the other businesses like Belstar, there also we are seeing some kind of stability. The AUM that has stabilized, and at the same time, losses have narrowed just to 32 crores on a sequential basis. Apart from that, the management commentary remained very strong, and as a result of all the things, if you look at brokerages, they have also been bullish now. In fact, we have got CLSA who increased the target price to 4,000 rupees per share, and at the same time, Jefferies also maintained a target price of 4,000 rupees for the stock. As a result, the stock is up more than 10%. So definitely, at the end of the result season, the stock actually delivered very well in terms of numbers as well as stock performance.
Oh yes, a big surge in Muthoot Finance's stock price today. Thank you so much, Gaurav, for that. From gold to pizzas now. Mangalam is joining us now to talk about Jubilant FoodWorks. How did the numbers look, Mangalam, and what is the management commentary looking like?
Well, a couple of things. The company had already given their second quarter update, so the street wasn't unaware of this 9.1% like-for-like growth that came by. But from then to now, all the other companies have also reported their like-for-like growth. And as a result of which, we saw a big outperformance coming in from both brands which are operated by Jubilant FoodWorks. One, Domino's India, the like-for-like growth has been 9.1%. Popeyes itself, they've said it's strong double-digit growth coming in. Compare that to McDonald's South and West, which is Westlife Food World, minus 2.8%. Burger King India, plus 2.8%. Even if you look at the Yum brands, numbers that have come by. Pizza Hut by Devyani, minus 4.1%. Pizza Hut Sapphire, minus 6%. KFC India, minus 4% for Devyani and minus 3% for Sapphire. So when you look at all these numbers that have been reported and then look at the size, scale and the pace at which Jubilant FoodWorks is growing, that definitely tells you that it is head and shoulders above everyone else, and which is why the stock is doing extremely well too. Add to the pizza, you have some seasoning, which is the management commentary. What is that? They expect 5 to 7% same-store sales growth and 10% store additions to continue every year, which is about 15% growth every year in the Domino's franchise. They target about 150 to 200 basis points margin improvement as well. So that's some cheese in the middle. And finally, for Popeyes, they plan to reach a 100-store mark by the end of this financial year or the start of next financial year. So that adds crunch as well. So to all of this, how much does it cost? 65 times FY27 price to earnings is what the stock has been trading at, and that's after today's up move. So crunch, cheese, as well as taste, all of that as compared to all the other players which are there in the QSR space.
And investors don't mind paying for it. Mangalam, thank you very much for joining in. Get into a break. More on the markets on the other side.
Welcome back. Yet again, the Nifty recovery getting sold into the below the 25,800 mark is where the index stands. We're counting down to few more major earnings on the final day of this earnings season. But we take your leave on this edition of Trading, our halftime report on the other side.